What is up, everyone? So I have come up with a list of 8 stocks that could triple if oil hits $100 per barrel.
What?
Now, if I made this video a year ago, everyone would have called me, crazy.
This is real. No. That's a scam.
Oil back then was, I think, around 40, 50 bucks a barrel. No one, and I mean no one, was expecting oil to be where it's at today. As I make this video, oil is trading WTI's 74 bucks a barrel, and Brent is 84 bucks a barrel. So we're not far off from 100 bucks a barrel, and it's very possible with the things that are going on. No, I do not think that oil is going to go to $100 a barrel this month. I think if it does go to 100 bucks, it's going to take a few months at least. It could be late 2018, early 2019. And a lot of this depends on, Iran sanctions, Venezuela. There's so many moving parts in the oil market, and these things are always changing. We don't know, how much Iran oil we're going to lose. We don't know how much Venezuela is going to decline. We don't know how much Saudi Arabia is going to increase production. That's what makes the oil market so interesting, and that's why I love, studying this market. It's very fascinating to me. And if you haven't already, I go much more in depth on, the fundamentals of, Iran, Venezuela, Saudi Arabia, OPEC, if they're going to increase production in previous videos. So if you haven't already, go back and watch those. I go much more in depth. That's not what this video is about. In this video, I'm going to go over 8 stocks that I've come up with that, very well could triple if oil does hit 100 bucks a barrel and stays there for an extended period of time. Not every one of these stocks is going to triple. None of them may triple, but they have a very good chance of doubling, if not tripling, if oil goes to 100 bucks a barrel. Another thing that I want to mention is some of these are Canadian names, Canadian energy oil stocks, and those are really have capped off upside due to pipeline constraints. The Canadian government has declined the proposal to build new pipelines due to environmental reasons. So until those get approved, or they figure out, right now a lot of these oil names are signing railroad deals, which is more expensive than getting it out by pipeline, but this is really the only option that they have. And that's why WCS stands for Western Canadian Select Crude. That's what their crude oil is priced in. Is currently trading at about a $30 discount to WTI. So that's huge. That's why a lot of these names have not moved up with the rally in oil from 40 to 75, 85 bucks a barrel. A lot of these names haven't moved that much, strictly because the price that they get has not changed. So if these pipelines get built, if they do, it's going to take a year, 2 years. So right now I'm kind of selectively investing in these, and more so looking in like offshore drilling and also American, not necessarily shale oil names, but more so names that get heavy oil pricing, or Brent pricing, which pretty much always gets a premium to WTI. Right now it's 85 bucks. WTI is 75 bucks a barrel. So that's a $10 premium. So without further ado, we'll go and jump into my computer for this, and I'll go over some of these names and go over the charts and kind of show you how, the Canadian names have not, necessarily rallied with oil, and vice versa compared to some of the offshore drilling names and American drilling names. So let's go and get into it. Alrighty guys, so we're going to start off with a couple American names, and both of these drill a heavier oil, which gets priced in Brent, which gets a premium above WTI. That is different from pretty much the majority of shale oil and other American oil names. It's shale oil, and it's a lighter crude oil, and that gets priced in WTI, which stands for West Texas Intermediate Oil, and that's historically has traded at a discount to Brent. Right now it's about a $10 discount. So I mean that's a pretty big deal that some of these names, they get a premium to WTI, and what they sell is priced in Brent. And as you'll see, that's why these names have just had a monster rally compared to a lot of the Canadian names, or even other shale names, have not rallied nearly this much. Another reason being, these do have more leverage. The market cap of these names are small. It's smaller. I think CRC is around like 2 billion market cap. So they are more leveraged. During the downturn, they had a very big risk of going bankrupt. And if I go back a little bit, this had a low of like $2.81. So obviously the market thought this had a very good chance of going bankrupt. Their financials were just completely wrecked. And so this name I do own. I'll be honest, I didn't buy it back here really anywhere. I was a little bit late to the party on this one. I do own a lot of Canadian names, and due to the ongoing, pipeline issues, I'm looking at more offshore drilling names and also American names. I'm kicking myself because I've missed this huge rally, but honestly, this is still very undervalued. A lot of the names that I'm going to be mentioning are still very undervalued compared to what oil is at today. A lot of that is just due to the fact that sentiment is still, very negative towards the oil sector, just because of how beaten down the sector has been in the last 3 years. It takes time for sentiment to change, but this is a name that very well could triple if oil, especially Brent, goes $200 or above. We go back to when oil was 2014, pre-2014 oil was around like 85 to $110 a barrel, kind of hovered in that range. This was like $100 stock. One of the people that I follow on Seeking Alpha, I definitely recommend his work. It's HFIR is the name if you want to look it up, and I'll link it down below also. They've run models, financial models, on what this would trade at if oil were to be like $100 a barrel. And they have this stock at like $150, $200 per share if oil does go to, I believe they have it at $100 Brent, and they also have models for if Brent does go to like $120 a barrel. That's like their bull case. And I'll try to pull that model up that they have and insert it in this video. That way you guys can look at it. So yeah, as far as like me buying more of this stock, if we do get like a little bit more of a pullback, maybe down to $40, I'll definitely look at adding more to this stock. This is probably one of the the purest play that you can have on oil, especially Brent pricing. It's it's very sensitive to the pricing in Brent, and a lot of other oil stocks, they have businesses like Conoco. I own ConocoPhillips, which has performed. I bought this at $50 a share. It's just killed it, but obviously it's not going to triple like CRC has in the last year, because they have a lot of other businesses in other segments in the oil market. So CRC and pretty much every name that I'm going to list off is a very pure play on oil. So forewarning, if oil doesn't go to $100 and something happens, maybe Saudi Arabia stuns the world and starts pumping 12 million barrels of oil a day, which I don't think anyone believes, and I don't think they have the capacity to, or I mean, just that'd be stupid because they are so reliant on oil prices. Obviously, they drove the prices down in 2014, but I do not see them wanting to do that again. But so if for whatever reason oil were to go back down to 40, 50, 60 bucks a barrel, 60, a lot of these names would be fine, but below that, obviously, back in 2014, 15, some of these names were on the verge of bankruptcy. So I just want to throw that out there. There is risk with whatever you do investing, so I just want to throw that out there. So next name is DNR, Denbury Resources. This is another American name that has gets pricing in Brent because they drill heavy oil, and this thing has had a just a huge rally from about $1 a share to $6. So this thing has just been crushing it the last year. We go back to 3 years, had a low of like 86 cents. Back in pre-2014, this was trading around like $20 per share range. And I also want to mention, like past results and performance doesn't always equate to what the future would hold. So like even though this was like $20 stock pre-2014, that doesn't always mean that just because 100, if oil does go back to $100 a barrel, that doesn't necessarily mean that this is going to go back to 20 bucks. But it is a good measure of approximate performance and what you might expect from what this stock would do if oil prices were to go back to 100 bucks. So moving on, I'll start clicking through these a little bit faster. So we'll go to offshore drilling now. This is something that I've actually not been investing in, but I am definitely looking much more in depth right now. A lot of these names haven't rallied that much with oil. I mean, it has had a pretty big rally, but a lot of the offshore drilling names, they do need higher oil prices. And, there's been a lot of, studies done at, what price shale, Canadian, offshore drilling, what prices they need to be, break even, basically. Offshore drilling is up there with, break even. And that's why some of these have not rallied that much, just because they do need, from a lot of the studies that I've looked at, they need more than what shale is break even. A lot of them are like, from what I've looked at, is like 80 bucks a barrel is break even. So that's why if we do see 100 bucks a barrel, you'll see these names just have a monster rally. ESV actually acquired I think this week on Monday, that's why this went up a little bit. They announced that they were acquiring another drilling name. So we'll go back to like 10-year. And just so you can see, like, pre-2014, this was trading around like 50 to 60 bucks a share. So again, past stock price / stock performance doesn't always mean that's what the future is going to be. But like I said, it's a good measure. Another reason why past stock performance isn't always a great indicator is, they can dilute their stock. That's what's happened to Chesapeake. I'm not sure on ESV and some of these other drilling names if they diluted their stock. And by the way, diluting means just issuing more shares, which a lot of oil companies did in this period just because they were in such financial ruin that they had to basically issue more shares to raise capital. But yeah, I mean, this is definitely a name, and like I said, I'll start flicking through these. ESV, Noble Energy. This is 10-year charts. Rig, that's another one. So yeah, these are all offshore drilling, and like I said, these have, you know, a slightly higher break even than a lot of shale names. That's why they just absolutely cratered in the last oil price plunge. And, you know, another thing that I'll mention with offshore drilling though is because we've had such underinvestment the last 3 to 4 years in any sort of long-term oil fields, there's been practically like no new discovered fields. So if something does happen with supply, like, you know, say Saudi Arabia can't offset Iran sanctions, Venezuela declining production, say something like that does happen, there's really no other alternative. Like, you know, shale oil can only go up so much. It's already pretty capped out at just due to like pipeline constraints, and also a lot of the, you know, their fields are declining. You know, oil fields have a decline rate, and shale oil has a higher, much higher decline rate than conventional fields. So it's going to be really interesting. You know, if, like I said, if Saudi Arabia can't offset what we're losing in Venezuela and Iran, you're going to see a lot of bigger oil companies acquire, and you're seeing a lot of consolidation in a lot of oil names, but especially in offshore drilling, you're going to see a lot of bigger oil companies acquiring these names, and they're going to be looking to add rigs offshore just because there's really going to be no other alternative, honestly. And that's where you could see these names really shoot up in price. So now I'll go to some of my Canadian names that I actually own two of these. I don't own any of these offshore drilling names, but like I said, I'm very seriously looking at ESV especially, and Noble Energy and Rig as well. I mean, I do own XES, which is ETF, and they actually do own a lot of these offshore drilling names. And I will go to my Canadian names, and you'll see that, you know, this has rallied a little bit. It's GNGF. Again, like I said, WCS has been pretty much flat. It's trading at a huge discount to WTI, and that's not going to improve. You know, it's going to, a lot of the Canadian oil names have signed rail deals to, you know, get their oil transported, but that is, you know, somewhat expensive. I see the spread narrowing down to like 15, 18 bucks, but that's still somewhat significant. So again, like, if pipelines ever do get built out, these will easily triple with $100 oil. There's no doubt in my mind. It's just, you know, the time frame on these getting built out, especially with the current government in place. It's really a crapshoot on when those get built out. And until then, you know, a lot of these names are really capped. So GNGF, that's one. CVE, I own this one. As you can see, that hasn't really rallied that much. BTE, another one that's pretty much done nothing. So we'll go to like CVE 10-year. As you can see, like, hasn't done much at all. But, you know, pre-2014, this was like $30, $40 stock. So until those issues get resolved, expect upside to be somewhat limited. That's why I like more of the American names, even though they've rallied a ton. And that's why I'm looking at offshore drilling, because that's what I think is the next one that could have a huge rally that hasn't necessarily rallied a ton as of yet. And we'll go to XES, which is again like an ETF that I own that owns a lot of these offshore drilling names. And we'll compare it to the price of crude right now. As you can see, like, a lot of these are still very undervalued. Like I said, sentiment is still not the greatest in the oil sector, but expect that to change the longer the oil stays really above 80 bucks a barrel. And like in the previous video, I went over like how I think tech sector is not necessarily dead, but you're going to see a lot of people rotate out of those names because growth is slowing significantly, and a lot of the companies are having to spend a lot more on just really regulating themselves and more so like security. You know, you've seen a lot of scandal, backlash, whatever you want to call it, in a lot of the tech stocks, you know, Facebook especially, and they're having to spend a lot more on privacy, and don't expect that to get any better. That's why I think a lot of people are rotating out of tech and into more value plays, especially energy. So as you can see, purple line is WTI, and this is XES, the ETF. Historically, we'll go back to 10 years, this has followed oil pretty much to a T, and it's just hugely lagging oil right now. And again, expect that to reverse as time goes on, as oil stays where it's at currently, or even rally even more. So I hope you guys got a lot of value out of that, and value in me actually naming very specific names that, you know, a lot of these are very pure plays, and are very reliant, you know, they're drilling names, and obviously the price of oil has a huge impact on the price of that stock. And like I said, the big ones that I'm looking at now is like offshore drilling, because that's what I think the next one that we could see a huge rally in. We've seen a huge rally in a lot of, you know, CRC and DNR, which are the American names, and, you know, expect that to continue. But where I see the biggest value right now that has a chance, you know, like I said, Canadian names, the upside is kind of capped right now with their pipeline constraints, and honestly I don't see that getting much better in the near future. So offshore drilling is the one that I'm focusing on now. ESV is at the top of my list. I'm also looking at NE and RIG. And again, definitely go back if you haven't already and check out some of my other videos. That's where I go more in depth into like some of the fundamentals of the oil markets. You know, this video I just went over names, but if you haven't already, go back, look at the other videos, and that's where I go over some of the fundamentals and why I think a rally to $100 a barrel is definitely realistic within the next 6 months. So yeah, that's it for this video, guys. Thanks for watching, and I'll see you guys in the next one.